The NASDAQ SMC Nicklaus timing model NQ strategy went long on November 22nd. The strategy, if you still were in the trade, you would be up on one mini contract, 16,140. If you had used a micro, 1,600. If you had used options, maybe even more. If you had used ETFs, it would be less, but you would be profitable. The Russell 2000, the Nicklaus timing model, also went long on the 22nd, and you would be down $95. The YM, the Dow, went long on the 22nd, and you would be up 1555. The ES, 5,600. And then the confirming signal, the VIX. This is what gives us our confidence to stay long, because on the 25th, the VIX went short in the opposite direction, which only confirms the strength of the trend to us. If you held, you would be up 24,360. Of course, you could have taken profits earlier, and you could have used options or gone after the ETFs. What is the Nicklaus timing model? Let me take you behind the curtain. This is the Nicklaus timing model on a daily chart. Now you do see Bollinger Bands. Now the model doesn't use Bollinger Bands, but we put them on for perspective. Our monthly members get a report every night. We lead off every night with how Nicklaus is positioned in the market. It's a wonderful way to try to stay on the right side of the market. Now, I'm going to show you a performance report that goes back some 10 years. And you can see for an extended period of time, it didn't do much of anything. This is around 2008, and she starts to move out. Models can come in and out of favor. There is no guarantee. Let me show you what you would have done if you had taken every signal and held it to its conclusion, good or bad, over the last 12 months. You would have realized 36,623.50, a profit factor of 1.53, 45 trades, 46% profitable. Now, if you get in between those trades and start trading greed and fear every time you draw down, your results would be something different. Let me show you what the Dow would have done, the YM, $1,000. The NQ, $78,000. The Russell, click on that, 796, and then the VIX itself, 788. And you can see in years past, you could have a down year. There is no guarantee of outcome. There isn't. And in 2022, it had a very rough year. Models are just that. They're models. They're not a guarantee. Nobody can guarantee what's going to happen in the future. Our monthly members get to see this model every night. And from there, they can make their own decisions on how they might want to play it, how they might want to distribute their risk, where they might want to take their profits and control their drawdowns. Annual members have much more at their fingertips because they have the model on their desktop, and they can optimize, if they chose to, what would be a reasonable profit target, a reasonable stop loss, and go from there. I am Bagadon. This is StockMarketCaddy.com. Be sure to visit our website, send us your questions, and you're welcome to call me any day from 9 a.m. to 9 p.m. at 813-758-8263. Remember, folks, 90% of short putts never go in the hole.